securities. Your name is the name everybody breathes when they talk about the Mag 7 and Tesla and NVIDIA. Dan, I've said this, and Dan, I've said that. And you've been bullish, and you've been pretty much right over the many years. This morning, I want to get to some of the headlines that I know are coming up. But, you know, what's on you? I didn't see your notes today. When you woke up this morning, what was the first thing you thought when you thought about this market after an incredible May?
I mean, Nicole, I think new all-time highs for tech are on the horizon because, in my opinion, you know, this is just the start of the next stage of the AI revolution playing out. And I think, look, the tariffs obviously continue to be in the background, and that's going to continue to come up in terms of the volatility. But I think the reality is bark's going to be worse than the bite. And I think Trump administration further and further would just take steps back from the cliff. That's sort of our view.
Yeah, because originally you were very worried that we were pushed back decades with the Trump tariffs and all that. You were extremely worried. But now you're back to the rhetoric of new highs and the AI revolution, and you expect new highs for tech. When would that be? 6 months, 12 months?
I think close. I mean, I think as we get towards summer, you know, into fall, you're going to have deals on the table. You know, whether it's India, whether it's Vietnam, whether it's South Korea, at least some framework of deals. And then I think it speaks to where the spending is. I mean, you go from chips now to software. And I think software is really going to be where, in terms of the AI revolution, that's going to be a huge driver. And then you look at the autonomous future, robotics. I mean, that right now is kind of going to be like where the next stages are of AI spend.
A corporation worth $5 trillion has never existed. Microsoft and NVIDIA are the businesses that are most likely to achieve that milestone. The market valuation of both businesses is around $3.5 trillion. They might hit the $5 trillion milestone in a few years if their present development paths continue. Which one, though, will arrive first? Based on its remarkable growth and the expanding market for its products, NVIDIA appears to be the answer. NVIDIA is a desirable stock to own at the moment because, despite making investors a ton of money in recent years, there is still a lot more to come. Here are some reasons why, by 2028, NVIDIA might become the first $5 trillion corporation. The growth of artificial intelligence, AI, and data centers that support AI computations coincide with NVIDIA's ascent. Large-scale cloud service providers like Microsoft, who supply enormous amounts of computing power, storage, and networking infrastructure, are vying with one another to set up as much hardware as they can to handle AI workloads. In this manner, they can charge usage fees to the several businesses that use their servers to run AI. Although several businesses are following this strategy, NVIDIA is the primary provider of the graphics processing units, GPUs, that are essential to their operations. NVIDIA has a 90% or more market share in the data center GPU business, comparable to Alphabet's hegemony in the search engine sector through Google, even if there are alternatives to its products. This aids in contextualizing NVIDIA's supremacy. Better yet, the need for data centers is expanding at a much faster rate than search. In 2025, almost all AI hyperscalers have reported record capital expenditures for their data centers. This increased spending will continue for several years because it takes years to plan, design, and build the locations on which these centers are located. During its 2025 GTC event, NVIDIA referenced a third-party estimate that stated that worldwide data center spending was $400 billion in 2024, but is predicted to increase to $1 trillion by 2028. To put it in perspective, NVIDIA's data center division generated $115 billion in revenue in FY 2025, which includes the majority of 2024. Thus, NVIDIA received around $29 for every $100 spent on data centers. What does this portend for NVIDIA going forward? Let's view these growth estimates cautiously. Assume that NVIDIA's revenue share drops from 29% to 25%, and that data center construction expenditures only increase to $800 billion. NVIDIA will still generate over $160 billion in revenue from data centers alone in 2028 if that occurs. NVIDIA's non-data center businesses generated $16 billion in revenue in FY 2025. In addition to the anticipated data center earnings, we would receive $216 billion if other divisions didn't expand. Compared to current revenue levels, that is a 46% gain. The corresponding anticipated sales growth would raise NVIDIA's market capitalization to $5.03 trillion. This reasoning has several limitations, such as what would happen if NVIDIA's margins deteriorated or if its valuation significantly dropped. But by taking away some market share and reducing the overall cost of data center buildouts, we've already factored in some of that. NVIDIA will probably surpass the $5 trillion mark in the coming years, and I believe it will be the first firm to accomplish it. Investors should make sure they're in this excellent AI investment for the foreseeable future because NVIDIA's potential is continually growing. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
For AI. And then we've talked about NVIDIA, 4 trillion, then eventually 5 trillion. There's one chip in the world fueling AI, and it's the godfather of AI, Jensen, NVIDIA.
And where do you think NVIDIA will be priced one day?
Look, I think ultimately you're going to be looking at, $250 stock. As this all sort of plays out, near term 175 to 200. Obviously, tariffs clearly have derailed some of the growth in terms of China. But I don't think that story's done, right, in terms of the China piece. I think as you think about U.S.-China negotiations, getting back some of that's going to be key because NVIDIA is not just handing that China business to Huawei.
Look, I was terribly worried when you started to be really worried. And now you seem less worried. I just don't fully understand the turnaround unless you had a personal conversation with President Trump or something, which I wouldn't doubt. You really went from very worried, and you had some of our guests really worried, and now less so. You're back on it's going to be 2 trillion, 5 trillion, this will double. It just is. The tariffs are not going away. I mean, I think the tariffs are going to be here. They're just going to be less, but there's still going to be tariffs.
Yeah, but Nicole, if you go back to like those dark days, that was really like the tariffs that were on the table were, we're going to cut U.S. tech off the knees. Then ultimately the 90-day reprieve, right, clearly understanding that you're going to need to have significant deals. The China got de-escalated. I mean, I think when it's all said and done, you're going to have a 10% baseline tariff, and you'll have incremental reciprocal tariffs, 5, 10%. That's digestible. But if you go back to that first week, and especially that first 2 weeks, till really Besant, took control of things. I mean, it was a scary time. I mean, you talked about that, but that's why it's so dramatically different relative to what was potentially on the table to now. It's going to be a fraction.
Last year, when investors flocked to this area of tremendous possibility, artificial intelligence, AI equities were the market's greatest winners. Some of today's early pioneers in the sector may benefit, as well as investors who buy now and hang on, since analysts predict the AI market will grow to trillions of dollars in the upcoming years. However, a few months ago, this investing concept momentarily lost steam. Investors were concerned that President Donald Trump's announcement of import tariffs would raise costs, which would put a strain on both businesses' budgets and consumers' wallets. All of this was bad for business profits and the economy. However, as early trade agreements and discussions between the United States and China have sparked new hope, investors have dismissed their most pessimistic predictions in recent weeks. Additionally, encouraging economic statistics such as inflation rates and consumer mood also allayed investor concerns. Indexes have rallied as a result of all of this, which is encouraging for growth stocks like AI businesses in the months ahead. Let's focus on 2 AI stocks that have the potential to rise sharply in 2025's second half. Since the shares of this leading AI chip designer have increased 800% in the last 2 calendar years, investors in NVIDIA have grown accustomed to significant returns. However, as of the beginning of this year, performance declined due to the issues I highlighted and the possibility that NVIDIA users might cut back on their purchases. However, data from these clients, who range from Alphabet to Meta platforms, indicates that investing in AI is still a top priority, which is great news for NVIDIA. This continuous investment in AI is also seen in NVIDIA's most recent quarterly earnings report, when revenue increased 69% to $44 billion. Demand for the company's new Blackwell architecture and chip is still high, particularly in the field of inference, the thinking an AI model needs to do in order to solve issues. Strength in this area is crucial since inferencing may be a major development driver in the AI story's subsequent phases. NVIDIA may undoubtedly see more competition in the years to come, but I have faith that the company's current leadership and commitment to yearly innovation will keep it 1 or 2 steps ahead of its competitors. We can see that the IT giant is well on its way to achieving its innovation goals because it has already laid out its roadmap for chip launches through 2028. NVIDIA is obviously in a position to benefit in the long run, but why is the stock expected to surge right now? Many investors could view NVIDIA's current price as a fantastic opportunity to purchase, as it is only trading for 33 times projected earnings projections, down from 50x earlier this year. NVIDIA has a lot of room to grow from here, and any positive news in the second half of the year might spur it to soar higher after a challenging start. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
I think it's all going to be about what demand looks like. Obviously, China will be the headwind in terms of H20, but what they see from sovereigns and ultimately more and more enterprise. And we think in terms of big tech CapEx, that's actually going to exceed $325 billion. So I think the net, this is going to be one, when you hear from the godfather of AI, Jensen, it's going to be bullish. I view it as a bright green light for tech because it's going to show, despite the fears, demand still outstripping supply 8-1, even when you X out China.
What do you think? What is his calculus on China? He's got so many different constituencies to please on that one, right?
Look, I think it's a $3 billion headwind basically going into this quarter, but I think that's something that's already started factored in. I think the way the street's going to look at the quarter, it's less focused on the quarter. It's more on, okay, what does Middle East be? What is sovereigns? What does that bring in? And I think for him, it's a balancing act because he needs to play nice in the sandbox when it comes to 202 area code, but also doesn't want to give away that China business to Huawei. And that right now is that sort of balancing act for Jensen.
Do you think their product rollout schedule is back to being smooth? Fewer hiccups like we saw in 24?
Yeah, we saw much less hiccups in terms of supply chain, everything we saw in Asia.
Yeah.
And I think it just comes down to, Carl, like there's one chip in the world fueling the AI revolution, and it's led by Jensen and NVIDIA. And I think even though others trying to narrow the gap, that's the reality. And I think also speaks to Trump administration knows their big poker chip in all this negotiation. It's NVIDIA as well as Apple.
So so the cancellation of the diffusion rule. This was like a big deal on the Middle East trip that they went on. Is that going to be reflected in guidance?
So I think it's still too early there, but based on our estimate, I mean, we think this ultimately opens up another $1 trillion of market opportunity, not just for NVIDIA, but for AI revolution. When you think about Middle East, all the data center build-outs, what this ultimately means. And I think the commentary that Jensen's going to talk about is what they see in the pipeline. That's why, in our view, the quarter, okay, I think guidance will be generally in line, maybe slightly better. But I think what the street's focus on is what does this mean for medium-term outlook? Does this change any of their sort of plans? And I think this is going to be a huge vote of confidence for the AI revolution. In my opinion, this is going to be a catalyst that you'll see tech new highs.
You do. You think everything, I mean, if in fact you're right that everything gets floated upward.
I mean, look, and we've talked, obviously it started off white knuckles. We navigated through it. You've seen steps off the cliff in terms of de-escalation of tariffs. But it comes down to, like, this is a fourth industrial revolution. And when you look at the amount spent, for every dollar spent on a NVIDIA chip, there's a $10 multiplier across the rest of tech. That's why you see from software to nuclear, ACO and others. And I think that right now, the use cases, as you've talked about a lot, use cases are playing out. Palantir, Snowflake, and I think you're going to see more.
So why is it flat this year, NVIDIA?
Because I think it's all about, right now, they're in the eye of the storm. And I believe this quarter is going to be a huge positive inflection point. We call it 175, bull case 225, to what I believe this is going to be the charge to not just but I believe $5 trillion market cap and look in the next few years, despite the tariff.
Following CEO Jensen Huang's high-profile European tour, Oppenheimer recently sent a client note suggesting that NVIDIA could profit from growing interest in sovereign artificial intelligence systems around the world. According to the company, NVIDIA is collaborating closely with governments to support the development of national AI infrastructure. According to Oppenheimer, Europe may represent for roughly $120 billion of the $1.5 trillion global addressable market for sovereign AI. NVIDIA and Deutsche Telekom announced a new alliance last week to help Germany's transition to autonomous AI. Digital twins, robotics, and simulation are among the industrial use cases that the agreement seeks to expedite. During a keynote address at the Paris-based VivaTech conference, Huang also revealed a partnership with the European Broadcasting Union. Later, as NVIDIA extends its autonomous AI strategy throughout important European markets, he traveled to London for additional engagements at London Tech Week. As investors consider the potential of sovereign AI in addition to other growth drivers in its enterprise and data center businesses, NVIDIA's shares have increased by around 1/3 since late April. As AI's power demands rise, TerraPower, backed by Bill Gates, has closed a $650 million financing headed by NVIDIA's ventures to power its first Natrium reactor. Alongside current backers Gates and HD Hyundai, NVIDIA's venture arm has contributed to the cash as TerraPower moves closer to regulatory licensing for its Natrium project, which is set to become the first commercial advanced nuclear facility in the United States with simplified modular construction. With construction accelerating, this funding infusion will support engineering, licensing, and early site development. Non-nuclear work began last year. TerraPower is still privately held, and UBS was the sole placement agent. Reliable, carbon-free power is essential as data centers and AI consume more electricity. With NVIDIA's involvement, IT giants are placing their bets on next-generation nuclear to fulfill the world's growing energy demands. If Natrium is successful, it has the potential to change the energy landscape by supplying a steady baseload that powers compute-hungry AI and supplements intermittent renewables. Next year, keep an eye out for TerraPower's first reactor plans and licensing milestones. Success might solidify nuclear's role in driving the AI revolution of the future and open the door for comparable modular reactors around the world. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.